Intel is making waves and proving the doubters wrong with a massive 75% surge this year. By successfully launching Panther Lake chips and securing major partnerships like the Tesla Terafab project, they are cementing their status as a legitimate AI contender. Investors are watching closely to see if they can maintain this momentum through the upcoming 14A shift.
Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Applied Materials is at the center of the hardware revolution as they push hard into 2nm AI chip manufacturing. Through strategic collaborations with industry giants like Samsung, SK Hynix, and Micron at their EPIC Center, they are locking in their position as a critical infrastructure provider. The real question is whether they can navigate global trade pressures while continuing to fuel the next generation of semiconductor breakthroughs. Alphabet is shaking up the cloud landscape with potential plans to develop custom silicon alongside Marvell. This move is all about taking direct control over AI costs and performance, aiming to optimize Google Cloud services while reducing reliance on third-party hardware. If this partnership hits the production stage, it could fundamentally change the economics of the entire AI cloud market. Looking beyond the headlines, visionaries like Elon Musk and Andy Jassy are betting on a massive shift toward a future dominated by humanoid robots and generative AI. While the tech landscape is evolving rapidly, we are here to break down the latest opportunities that matter for your portfolio. Stay ahead of the curve by hitting that like button, subscribing to the channel, and clicking the bell icon for more updates. Is Intel finally shedding its underdog status, or are we just witnessing the calm before another volatility storm? With shares up a staggering 75% year-to-date, the chip giant has officially transitioned from a cigar-butt value play to a legitimate heavyweight contender in the AI race. It's a remarkable turnaround, especially considering that just a few months ago, many investors viewed Intel's comeback plan as little more than a pipe dream. But success in the tech world isn't bought with empty promises. It's earned in the lab, and Intel's execution of the 18A process for its Panther Lake chips proves they've still got the engineering muscle to compete. However, we have to talk about the valuation. The days of scooping up Intel at bargain bin prices are long gone. The current stock price assumes perfection, leaving zero margin for error as the company pivots toward the 14A shift and struggles to turn its foundry business profitable. This is where the narrative gets interesting. Intel is now positioning itself as a Western-based alternative to TSMC, potentially offering a safer harbor from geopolitical tensions. With high-profile partnerships like Tesla's Terafab project already in the mix, the momentum is undeniably real. So, where do we go from here? If Intel can hit these upcoming milestones, the stock might still be undervalued given the long-term growth trajectory in AI and edge computing. But if they stumble, that premium valuation will evaporate in a heartbeat. It all comes down to one word: execution. Before you decide to jump in, make sure to check out the link in the description for our experts list of the top 10 AI stocks to watch right now. Are you betting on an Intel resurgence, or is the risk just too high at these levels? Let me know your thoughts in the comments, and don't forget to hit that subscribe button for more market insights. Remember, in the high-stakes game of semiconductors, the winner isn't always the one with the best tech. It's the one that delivers on its promises every single time. Ever wonder what really powers the AI revolution? It's not just code, it's the physical reality of building a chip. Today, we're looking at Applied Materials, the gatekeeper of the semiconductor world. If you want to own this stock, you've got to ask yourself one question: is their mastery of materials engineering enough to survive the brutal tug-of-war between AI growth and geopolitical lockdowns? Right now, Applied Materials is doubling down on 2nm gate all-around technology, essentially trying to rewrite the rulebook for what's possible in silicon. Their massive $5 billion investment in the EPIC Center, alongside giants like Samsung and SK Hynix, isn't just a R&D play, it's a defensive moat. They are embedding themselves so deeply into next-gen logic and packaging that they become almost impossible to replace. But let's keep it real. The shadow of China-related export controls looms large. while the tech story is incredibly bullish, aiming for $32.5 billion in revenue by 2028, the volatility of global trade is the wild card that could ruin the math. Analysts are split down the middle here. Some see a clear path to a $398 fair value, while the skeptics are bracing for a much slower grind. So, is Applied Materials a foundational asset or a ticking geopolitical risk? The market is currently pricing it right at the edge of both scenarios. If you're a long-term investor who likes to look past the noise, you need to dig into the actual numbers behind these forecasts. Check the link in the description for our full analysis. Grab our free portfolio tool to track these risks in real time. And don't forget to hit subscribe if you want to stay ahead of the next market move. Remember, true alpha isn't found by following the crowd. It's found by doing the homework they're too scared to do. Is Google about to flip the script on the AI chip wars? We are looking at potential talks between Alphabet and Marvell that could fundamentally rewrite the economics of cloud computing. Shares of Google have been on an absolute tear, up nearly 130% over the last year, and it is no secret that the market is pinning the company's future squarely on its AI dominance. But here is the real story. If Google moves forward with custom silicon alongside Marvell, they are not just building better hardware. They are trying to solve the single most expensive problem in the industry, which is the cost of running large-scale AI models. Right now, giants like Google, Microsoft, and Amazon are heavily dependent on third-party GPU suppliers. By integrating a memory processing unit and a custom inference chip with their existing tensor processing units, Google is aiming to seize back control of their own performance and power efficiency. Think of it as a strategic pivot toward custom-fit hardware that could give Google Cloud a massive edge in pricing and reliability over competitors like Azure and AWS. Of course, this isn't a free lunch. It brings in deeper engineering complexity and significant upfront capital investment. For investors, the big question is how this move will shift their massive infrastructure spending in the coming quarters. Are they betting that custom silicon will pay for itself in the long run by squeezing out more performance per watt? Keep a close eye on their next earnings call for any management commentary on hardware strategy. This is a game of high-stakes infrastructure, and the winner will be the one who controls their own silicon destiny. If you want to keep tabs on how this develops and see what the broader community is saying about Alphabet's valuation, hit the link below to join our community and stay in the loop. Don't forget to like and subscribe for more deep dives into the stocks that are shaping our future. In the world of AI, the hardware you own today decides the market share you hold tomorrow. Ever feel like the biggest opportunities on Wall Street are already behind you? What if I told you that the next shift in global wealth won't be defined by the tech giants you see in the headlines every day, but by a silent revolution hiding in plain sight? When Jeff Bezos first hinted at the breakthrough technology that would define Amazon's future, most analysts shrugged it off. Today, Andy Jassy calls it a once-in-a-lifetime shift. And it isn't just Amazon. At the Future Investment Initiative, Elon Musk dropped a bombshell prediction. By 2040, we're looking at 10 billion humanoid robots. If that sounds like sci-fi, consider the price tag, $250 trillion. That isn't just a number, it's a total reimagining of the global economy. Now, here is the million-dollar question. How do you profit from a wave this massive? Most investors are scrambling for Nvidia or Microsoft, but the real story, the one that has hedge fund managers whispering behind closed doors, is a much smaller, under-owned company. This is the firm providing the picks and shovels for the AI gold rush, and their tech is so cost-effective, it's literally keeping rivals awake at night. I've spent months cutting through the noise to identify the one stock that sits at the center of this ecosystem. And I've put everything you need to know into an exclusive, deep-dive report that you can access right now for less than the cost of your lunch. By joining our premium readership newsletter, you aren't just getting one stock tip. You're getting a full year of elite research, including 11 monthly issues from Dr. Inan Dogan's personal portfolio, our 70-page quarterly insights, and an ad-free experience that lets you focus on what really matters, your returns. We are only opening up 1,000 spots for this research, and once the mainstream catches on, the window for these entry prices will slam shut. Everything is backed by our 30-day, no questions asked money-back guarantee, so there is zero risk to you. Click the link in the description to secure your spot, Download that report and stop chasing yesterday's news. The future of the economy is being built right now. Are you going to be an owner or just an observer?